In this video, I'll be breaking down how much you need to make in order to afford a 2023 Toyota Crown. You should really consider following one of these rules in order to avoid making a huge car buying mistake. There's a lot of young folks that end up overextending themselves on a car that they think they can afford, but they really can't, and it holds you back. It really doesn't do anything good for your future, so I'd highly consider you looking at one of these rules here. I've also got a link down there to a free auto quote where you could save a little bit of money on your car insurance. It's totally free. It takes 20-30 seconds just for you to do for yourself, but more on that later. There are 4 options I'll be going over today. You can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation. Some are willing to spend a little bit more in order to get the car that they really want. So these rules are kind of dedicated for either a person that wants to get from point A to point B, they can pick an easier rule for that, or if you're kind of a car, truck person, then you can pick a rule that gives you a little bit more spending money to spend on a vehicle like that. Stick around to the end of the video, find out what method would be best for you. This is 4 Wheel Finance, a channel dedicated to helping you making smart financial decisions. That's really the entire reasoning why I started this channel. I've seen people overextend themselves on a car, and they're a lot further behind the 8 ball and not as far along in life financially as they would like to be. Before I dive into the first rule, these videos take a lot of time and effort to make. Please give it a like, subscribe, comment down below what other vehicles that you would like me to review. The first rule is the 24-10 rule. And this states that you must put at least 20% down on the car, you shouldn't finance it for more than 4 years or 48 months, and the payment shouldn't be more than 10% of your monthly gross income. Since the 2023 Toyota Crown has an estimated MSRP of around $41,000, you would need to put down $6,160. And with the average new vehicle interest rate hovering around that 3.86% in a 48-month term, this would bring your monthly payment to $738.54. Take note here that you're also paying about $2,000 in interest, but if you were to extend that loan term out a couple more years, that interest would be a lot higher. Bank rate states that the average monthly insurance cost is around $148, but this varies greatly. It really depends your age, your gender, your driving history, the demographic, what part of the country you live in. So use one of those, that first link down there in the description. It'll give you a free quote exactly how much it would cost from some of the top nation's providers. This brings your monthly total to $886.54. Going back to that 24-10 rule, given your monthly cost is $886.54, this would equate to about a monthly gross income of 10 times that, or $8,865. And that would equal about $106,384 annually. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car and put what would be your car payment of $738.54 in the market instead, over the course of 5 years with a pretty conservative 6% rate of return, this would turn into about $51,567.83, gaining over $7,000 in interest. Take a look at those Acorns and M1 Finance links in the description down there. It's super easy to get started with those. You can start with pennies, literally. And I encourage you to get started as early as you can. If you understand compound interest, you'll know that it's much better to get started earlier, even if you're not putting a lot in. And this is just for the first 5 years. If you were to continue that for 10 years, it would amount to about $120,000, again, just at that 6% rate of return. And the stock market typically averages around 10% a year, so I figure that 6% is pretty conservative. The next rule is my own rule, and I've kind of come up with this because I'm a car guy myself, but I also am very into personal finance, and so I kind of made up this rule. Give me a little bit of security here. And what I think is you need to have a 6-month emergency fund, invest 15% of your gross income into your 401k, 403b, and then max out your Roth IRA, and if you really want to be a superstar, if you have a high deductible health savings account, then an HSA as well. And I know it seems like quite a lot of saving, but I really don't give you a monthly percentage rule that you have to stick to in terms of spending. So once you do this saving, it's up to you to decide if you want to kind of blow all your spare money on vacations, or if you want to get that car, or if you want to get a lift kit, new wheels, or roof racker, etc., or if you want to go out to eat more vacations. That's kind of why I created this. I want to make sure that your investing and your saving is spent, and then I'm not going to tell you how to spend your money beyond that. The 6-month emergency fund, that's just nice to have. If you lose your job, if an accident happens, it's nice to have that kind of buffer there. And then the investment portion, Gives you a little bit of security later in life when you're probably going to need it the most. Compound interest does wonders, so the earlier you get started, the better. And the majority of people say, well, nothing here is guaranteed. And that's 100% true. Nothing's guaranteed. Tomorrow's not guaranteed. You can get in a car accident or today. I mean, honestly, as long as you step out the door, anything can happen. But it's difficult to put a value on having peace of mind for yourself or your family's future in terms of having yourselves covered financially. The next rule is the Dave Ramsey rule. He's a pretty popular guy, so you've probably heard of him before. And he thinks you need to have a 3 to 6 month emergency fund built up, and the car shouldn't be more than 50% of your annual gross income, and you should purchase it in cash. Given the 2023 Toyota Crown is estimated at $41,000, your annual gross income would need to be a minimum of about $82,000. And ideally, it's nice to purchase a vehicle in cash, as you would avoid having to pay that interest, and your insurance would be a little bit lower. But there's not a whole lot of people spending $40,000 all in cash on a car. And the final rule to wrap this up is the 1/10 rule, developed by Financial Samurai, super popular finance blog, so you might have heard of that before. Personally, I think it's a pretty good rule, but it's very aggressive. This is for the person who doesn't really care what they drive, but wants to increase their net worth as quickly as they can. And this states that you shouldn't spend more than 10% of your gross annual income on the purchase price of a car. So for example, you make $100,000 a year, your car shouldn't be worth more than $10,000. And you must own that car for at least 5 years, but ideally more. And the theory here is to just minimize a lot of your financial stress and free up a lot of your extra money to go into assets or opportunities, things that go up in value. It's a lot more stressful making those life decisions and whatnot, important decisions, when you're worried about or having to factor in car payments each and every month. Taking a new job, moving houses, etc., it's a lot harder to make that choice when you know you have a payment and you got a lot of bills coming your way. Once again, this is 4 Wheel Finance. If you got any questions regarding car buying or how much of a car you can afford, please leave them in the comments down below. Also, can't stress it enough, give a look at those investing apps. I've got some Amazon links if you want to make sure your car is in tip-top condition, or that Smart Financial link completely free for you. Find out if you can get a little bit cheaper